All right, Brent, welcome back to the show. It's good to see you again, as always.
Hey, thank you. Good to be back.
So we ran into each other at Rick Rule's event, and that's sort of why we're here. Um, but before we talk about that event or what you might have learned or what you're doing now, um, we need to cover the matter of the let's see, I don't even know if I can pronounce this correctly. The the phreatic, is it was it a phreatic eruption that you
Oh,
tweeted
right.
about on July 23rd, and I in the Yellowstone National Park at the Biscuit Basin? Quite an eruption. I mean, people are like running to get out of the way of it. But you made a point. This is important to me because when Yellowstone finally blows, I'm toast. It's right down the road. So when that super cone or caldera or whatever they call it blows, Dan, there will be no more Dan. So, but you said, well, most likely phreatic with no magma. If there's magma involved, look out. So, what are we talking about here? I need to
Okay,
know.
I'll just okay. So there's what's called a hot spot that has been moving across from Oregon, across Idaho, the Snake River Plain, and all that.
Mhm.
And as the continent moves, the spot stays the same. And you keep getting volcanoes along that. Yellowstone is the most recent. It's about 700,000 years ago. That thing blew big, and it would have wiped out all the way over to North Dakota, South Dakota, Wyoming. That would have been destroyed. I think you're actually lucky because you're upwind. You might be all right. But what I'm talking about with the phreatic eruption is as these hot springs move water through,
Mhm.
they slowly close the vein or fracture with silica. And once that gets tight enough, the pressure below builds and they erupt. That's the phreatic eruption.
Mm,
And that's okay. But if there's magma actually injecting in there,
mm.
that probably means you've got trouble.
Yeah.
So you're good.
Okay. Upwind. Good to know. You see this? This is why we need scientific people in the show.
It's the downwind people that are need to be concerned, Dan. Yeah.
Yeah, that's
You
right.
don't want to be in North Dakota or South Dakota.
All right. So all our Dakota,
You don't anyway, actually.
yeah, that's right. The Dakota-based listeners will take note. Well, I'm glad we straightened that out. Um, so besides that, before we get to serious business, I noticed on your Twitter profile, I never noticed this before, it's beach volleyball. Are you like a competitive beach volleyball player?
I play it at least 2 or 3 times a week. Um, I'm past my spiking and blocking stage, but it's a great game on the beach. Perfect. It gets hot. You jump in the water. You can drink a beer and you play with friends. It's a good sport.
Sounds like a California thing.
I actually play it in Utah just as much.
Oh, okay. All right. Good to know. All right. So, not going to die in a fireball. Play a lot of beach volleyball. Got it. Um, so let's talk about what did you get out of Rick Rule's event this year? Because a guy like you is going to get a lot more out of it than a guy like me. I'm not a geologist. I'm not a scientist. I wander up and down the aisles, talk to people a little bit, but the geology, I know some basics, and I rely on those basics and people like you to sort of fill in the cracks. Um, did you come away from that with any like really big takeaways this year?
Um, I wouldn't say big takeaways, but it was a really good show because it was a very select group of exploration and some mining companies.
Hmm.
And so just sitting there and meeting with them all, talking with them, at their booths or at the bar, you pick up a lot of stuff that you don't get otherwise. Rumors and who's doing what and what they're thinking, progress on different companies' programs, that sort of thing. So I got a lot out of that. The macroeconomic stuff, that's always interesting to me. I don't really delve into that a lot. Um, but that's always interesting as well to sit through the presentations by some very smart people who follow that, including yourself. So that's good to do as well. In terms of picking new companies, there's things
Mhm.
I own that it was good to catch up, and there's a few I put more time into investigated, but I don't think there's one company new that I actually bought.
So what you're telling me speaks to one of the great lessons of investing or speculating in exploration mining, which is if you don't know the people pretty well and like have real contact with the people, you don't know anything, and you probably have no business, putting money to work. Correct?
Yeah, I think that certainly helps, especially in the early stage stuff where it's all about the next set of results, drill holes or whatever.
Hmm.
Once you get into a large mining company, you can look at the financials and their mining costs and that sort of thing.
Yeah,
But early stuff, it really helps to kind of you know know the people and know the project and know the expectations.
yeah, and I mean, frankly, Brent, to like, you just, I hate to put it this way, but it's true. If I'm being too harsh, let me know. Like, you got to go to Vancouver and meet everybody and figure out who the crooks are. You just do, right? I mean, come on. I mean, you're a nice guy, so if you don't want to pile on to that, I'm not gonna. I don't want to make you uncomfortable, but that's just my take on it. Maybe you can state that in a more judicious manner, but that's what it looks like to me.
That's right. There are certainly probably over half the companies listed, junior exploration companies listed, are working on projects that don't really stand a chance of providing a significant increase in the share price. And that's usually because it is because there are so few high quality projects or deposits out there to be found, but you don't really know if you've got one or not until you do the work.
Hmm.
Or, as I say, the other half of companies up there are picking up old, tired projects that have been drilled before and sort of re-drilling the best drill hole in the hopes of bumping up their stock and raising money and that sort of thing. That's really what you got to watch for, is the old dead projects that are being recirculated.
Yeah, it's like I said, it's sort of like there's people who really are the real genuine article, with and some of them have great multi-decade track records of creating value in exploration. And then there are like, geologists looking for paychecks, and you do have to figure out, and promoters and various types of people. And you have to
Yep,
figure out which ones are which. Is it
yep.
is it
That's
impossible to
part
do
of the
if you're not a geologist?
No, not really. I think what you really need, if you're not in the industry
Hmm.
or that sort of thing, is there are people out there you can rely on.
Hmm.
The brokers at Sprott and Carlsbad, they're all solid people.
Hmm.
The analysts at Sprott, and I'm not pushing Sprott, I'm just saying I know them well.
Yep, me too.
And there are other analysts out there. Newsletter writers. There's some good ones out there that actually know what they're doing. And as the gold price increases, you see a bunch of guys you've never heard of that were previously pushing crypto or lithium, and now they're pushing gold and copper. Then they know about as much about that as they did about crypto. So don't listen to them.
Right. Yeah, that happens with the companies too, doesn't it? In a real good mania, a gold company will all of a sudden be a crypto and vice versa, right? We saw that
Yep.
with,
Yeah, you've seen that over and over and over.
yeah, it's kind of a dead giveaway there. It's,
Yeah.
when the crypto company becomes a gold company. Um,
Yep.
okay, so, and another thing I wanted to ask you about was, I don't know much about your early career, and I note that like when we look at your Twitter profile, and I've just known you for a long time. You're an economic geologist. You're focused, as it says on your explorationinsights.com website, like turning rocks into money. you're specifically like, it's like this combination of investor and geologist, and um, that's how you spent many years. What did you do before that? Did you start out that way, like fresh out of school, or what did you do?
I came out of Utah State University and went straight into uranium exploration. Then jumped across, ended up in the Pacific Northwest, then Australia, New Zealand, Papua New Guinea, Indonesia. Worked over there. Then came across, worked in the Caribbean and Brazil and the Western U.S. Um, and this, I'll tell you a quick story. I was down in Brazil working on a shit project with a corrupt bunch of people. And I was out there. It was a lousy project. It was a bunch of garimperos, which are the local miners. They were all drunks. There were some really, let's call them old hookers at this camp. I'm standing there. I'm standing there in the rain. It's horrible. And these guys fly in their helicopter with their investors, take them around, show them how great everything is, and piss off to Manaus and have a great night there. And I'm still standing there. So I went to the prospectors and developers in Toronto that year, first time I'd been, and bumped into a good friend, Borden Putnam, who was then running a fund out of San Francisco,
Mm-hmm.
and cruised around with him and realized, that's when I thought, this saw the money side of it. He introduced me to Rick Rule in '97, and that's where I learned the money side of things, is working as his analyst for 3 or 4 years. Then I went independent again, but that's what got me into the turning rocks into money. So I learned the geology, and then I learned the money, and now hopefully I'm good at both.
Right.
What
Right.
did
And
you have to
anybody,
learn the first couple things you had to learn when you joined with Rick, and like learning about the money end of it? I think some listeners would be interested.
I would too.
All right, so what he did, Rick, he's cheap as hell.
Yep.
Um, and what he said was, I'm not going to pay you much, but I'm going to give you 200 grand to invest how you want, with interest and something above LIBOR, I think it was,
Mm-hmm.
and that was mine, to do what I want with it. If I lost it all, it was his loss as well. So the first year and a half, I was down 90 grand on that investment, and that's where I learned the money side of things. Is it's not just about the geology; it's about the people, the timing, the share structure, all that stuff plays into it, the jurisdictions. So that was a really good lesson. I ended up, working back to my 200 grand plus, and did well ever since. But that was the start, losing 90 grand in like that.
Yeah. Everybody pays their tuition, don't they? Especially in exploration mining. Everybody pays their tuition, man. Nobody gets away with that, without doing that.
Yep.
Um, I've mostly paid tuition in exploration mining. I've mostly not made money. Um, that's cool. I met Rick like, a year or so later. So
Yeah.
yeah, and he was the first person I met outside of just the regular newsletter crowd. He was the first
Mhm.
real investor that I met, and at the time we were talking about water companies, which he's one of the few people
Yep.
that even cares about companies that own water rights, and I went out there and visited, utilities and water rights holders, and it was interesting. It was a
Yeah.
great education. He's been something of a mentor to me, at times over the years. Like, he's my guy. He's my guy that I go to if I start getting interested in some little mining stock or other. And years ago, I was much more interested in them. He's very generous with his time, and I just sit down and say, "Can I trust this guy? Nope. Can I trust this guy? Yeah, he's a good guy. Can I trust this guy? Nope, nope, nope." There's a lot of no's on that list. So he's been
Yeah.
really great. Um,
Yep. Agree.
so you left there and just kind of went out on your own. Is that when you started doing Exploration Insights? When you left Rick?
Um, Actually, I joined. I got hired away by a fund out of Texas.
Mm.
That lasted 2 weeks.
2 weeks.
So I came in. Yeah, it wasn't. I'm glad it ended, but most of the stuff he had was crap, and I told him it was crap, and he didn't take to that. So that was over. And then I consulted to a number of mining firms and started writing something I called the Sometimes on Friday sheet, which was free. I just write my notes, have a few drinks Friday night and write something up.
That's great.
And that rolled into the newsletter that I bought from Paul Van Eaton, who I'd worked with a bunch. And that
Great
was
guy.
Exploration Insight.
Yeah, great guy.
Yeah, very, very smart guy. He bailed at the right time in 2008.
Yeah.
I another lesson.
Yeah.
And yeah, then I got that going, did it for 8 or 9 years, and met some fella named Joe Mazumder, who was one of the most, worked for the brokerage firms in Canada,
Mhm.
but he was the most honest, smartest analyst I'd come across, and slowly convinced him that the newsletter business was not all scams.
Mhm.
And so he took it over, and he's been writing Exploration Insights since. And I'm kind of on there as a, I guess you'd call it senior advisor.
Mhm.
We work together a lot, but it's his letter now, and it's, in my view, it is the best newsletter or anything coming out of any analyst that I've seen.
Yeah, I can't argue with that. Like I mean, I'm not here to sell your newsletter, but you're here because like we're really careful. Like I'm really careful about who I talk to in the mining world, like in a public forum like
Mm-hmm.
this. And it really is the real deal. It's like one of the places you go. Like with John Duty, you go there to find out if a major mining company is really making money and really has, is really a decent deal. And you go to you guys to find out if an exploration stock is even worth thinking about, let alone putting actual money into. So, yeah, makes sense to me. Um, and is Joe is a geo or no?
Yeah,
Yeah,
he's a geologist,
yeah.
but he's got a master's in mineral economics,
Oh,
um, and he got his degree in Canada somewhere. Then he went to Australia, got another one. Then he went to the School of Mines and got the economics degree. He's worked for major mining companies and brokerage firms, and now he's on his own.
all right. So honest Canadian, broker geologist, all in one place. Like, how often does that happen? So I mean, I got nothing against Canadians. I love them. Some
Yeah,
of
I
my
love
very best
Canadians.
friends are Canadians. That's right.
Yeah.
But well, I mean, I know the Altius guys and the Sprott people. I have nothing against Canada whatsoever. I love Canada. In fact, I've been there many times. I think I've been to almost, well, not every province. No, I think I'm 2 provinces shy of the total. But um,
Mm-hmm.
love Canada, love the people, and let's not misrepresent my viewpoint. But like I said, you go to Vancouver, and let's just say it's a rough crowd. So, and even
A lot of characters, a lot of interesting characters in this industry. That to me makes it really fun.
yeah, a lot of characters is a nice way to put that. So, Brent, let's provide our listeners with a little service here. Let's give them some bullet points. Let's give them Brent Cook's bullet points. If you're going to get into these stocks, you by all means, read stuff by people like you. But you gotta, you have to have a framework of your own. Where should they start? What are the 2, 3, 5, however many bullet points that folks should sort of concentrate on and focus their energy on if they're going to look at exploration mining stocks?
Yeah, I think one is, what's your narrative? What do you think is going to be happening in the big picture in terms of the global economy and that sort of thing, and how that plays on copper and gold and silver.
Mhm.
If your narrative is that it's going to be positive, then you're in the right space. Then I think you need to think about your risk profile. How much money do you want to put at risk? You can buy BHP or Newmont uh, and lower your risk, or you can head to the gambling tables and buy some $24 million market cap junior explorer.
Right.
where your chances of 10x are much much better. So that's kind of the big picture, I think. And then it comes down to finding a company or a number of companies. Like I've got, in theory, we have 20 companies max in the portfolio. I think that's all you can follow on a full-time basis. I think if, as an individual, lower that to 10. Most people, I'm afraid, retail investors tend to hear like me or somebody on stage recommend some stock and buy it, and then they forget why they buy it. They don't know how to follow the news, and you
Yeah.
know, 80% of the time, eventually these companies go broke because it's your odds of discovery are very low. So once you pick a company, follow it in detail. Know what your expectations are. Know what success looks like in terms of drill results. You know, and make sure what they're looking for, if they're successful, matters. I think too many companies are out there looking for something that, even if they're successful, the share dilution raising money, even though the market cap may increase, the share price doesn't. So you need to latch on to something that's going to be important enough for a major mining company to buy it. And I'll give you a good example. What that just happened this week is Philo Mining, great group of people, Lundin Mining.
Mm-hmm.
They started off in the high Andes, put together a concept. The stock was like $1.50 or something getting out of the gate. It was just bought by BHP for $34 more or less.
Mm-hmm.
So that's the sort of thing. But as it progressed, they had a concept. The drilling, the surface work seemed to look good. The geophysics they did looked good. The drilling hit some amazing drill holes, and that just continually got better. So that's a good example.
So where did the stock? They were bought out at 34. Where did it move from? Like, was it a penny stock at one point?
My recollection, I haven't looked, but I think it started life about $1 or $1.50
Okay,
Canadian.
nice move.
Very nice move.
Yeah.
Very nice move. That
Um,
makes up for a lot of mistakes.
yeah. Yeah, that's right. You only need one of those to make up for a bunch of mistakes, which is another
Mm-hmm.
nice thing. I remember Rick telling me, he had 100 and some odd stocks in one of his partnerships that he did, and it was like he said, 6 of them made all the returns, and it was like a 50% kegger for 10 years or something insane. So it's it's interesting. It's an interesting strategy just to hold a little bit, as a kind of almost like an option on huge success. Um,
Yeah, and I think I've made good money on stocks that eventually failed. Again, because as the news comes in, all right, it's looking all right, and then hang on, there's a fatal flaw, be it metallurgy or whatever.
mhm.
If you can catch that, you can still make good money before the rest of the market doesn't.
Yeah,
Um, that's you can get two, three, four baggers that way when the stock goes back down to
yeah.
below what you bought it for.
You're
You
reminding
just
me.
have to watch.
You're reminding me of Doug Casey. Like he said, I made all my money on a fraud, a flake out, and a psychotic break. And there were 3 stocks, and the CEO had a psychotic break, and he sold, and he made tons of money on that. And then I think he owned Briex before it collapsed. That was the fraud. And
Mm-hmm.
then I forget what the flake was, some stock that he owned in some Australian brokerage they forgot about for 5 years or something. And the guy called him up and said, "What do you want me to do with this?" And he had made millions of dollars and forgot about it. Yeah, good stuff. So, all right. So, what do we got? What did we say here? What was that, 1 or 2 bullet points? We wanted something that a
It was a
big,
lot.
yeah, that was, we wanted something that a big mining company would be very interested. So in other words, and this is something that some various folks, including Rick, have taught you don't, no small mines, no small deposits. That's not a good idea,
Right.
is it? Because the economics
No.
just don't work. Okay. So you want big
Mhm.
deposits, and you want good grades and good, metallurgy and all the rest of it. But big is an important one and an easy one to determine. Um,
Yeah, I would say high margin
mhm.
as well.
So high margin exploration mining companies don't have revenues. What do you mean high margin?
Well, I mean, the deposit they're looking for, the drilling out, has high margin. I mean, I can show you deposits in Nevada that average zero point 0.4 grams of gold per ton
Hmm.
that make, have really good margins. And I can show you one in Nevada that was 10 grams per ton that lost money and went broke. So it's not just grade, it's how much you make off what you're mining. So
Okay.
that's, it's a variety of deposits and stuff. So
All right.
grade is important, but it's not everything.
All right. Now, okay, that is super interesting. Point 0.4 versus 10. What's the difference? How do you assess the potential for margin in the mining operation?
Okay, so the point four is a large at surface open pit deposit, gold deposit that has been weathered over a few million years.
Okay.
And so the gold that used to be tied up in pyrite, in the molecular structure of the pyrite grain, it has turned to rust. And when it turned to rust, oxidized, the gold is released. So it's free. All they have to do is drop cyanide on that and the gold comes out.
Hmm.
So it's a really cheap operation to do that. Whereas the 10 gram per ton deposit was in a vein that was maybe half a meter wide. So your mining cost underground, um, the mining width was at least a meter. So your 10 gram resource was diluted by half. So it drops to 5 grams. And then it was really bad rock. So a bunch of stuff would fall in. They kept having troubles with that. And so the 10 grams per ton on the resource report ended up being something like 3 in the end, and they lost money.
Okay, so a good little tangent here is that um, there's a big difference between owning a deposit that looks great and making money in mining. And mining is a business like every investor, every knowledgeable person I know says, just stick to the royalties and the prospect generation, these little amounts of capital that produce good results, and stay away from the mining business because it's a freaking nightmare. The water
Yeah,
and
well,
bad
that's not
rocks
my
and all the rest of it.
yeah, that's not my advice, but okay.
Okay.
Gamble a bit, have some fun.
Right. Okay. Yeah. If you're not having fun, man, by all means, do something else. Um, all right. So I'm looking for bullet points here, Brent. I'm going to keep badgering you here. So we
Okay.
got we got the difference between a deposit that can really be mined well and a large enough one to attract a major. Um, does anything else come to mind? Good people. We've
Well,
determined that
certainly,
that's one of them, right? Good people,
they're good people. Jurisdiction, and by that
jurisdiction.
I just don't mean a country. I mean specifically as where you're at in that country.
Hmm.
For
The
instance,
the
I mean,
ge
take
the
the U.S.
geology you're talking about, like the productiveness of the terrain.
No, no, actually, the politics and
Oh, the
government and
okay.
that sort
Legislation,
of thing.
yeah, or
All
yeah.
right.
Yeah, the
Okay.
jurisdiction.
Okay.
For instance, I mean, take the U.S. Nevada, good. California, not so good.
Yeah.
Utah, good. Oregon, not so good.
Yeah.
Right. Same thing in Argentina until recently, at least. San Juan province was good. Mendoza was bad. Um,
Gotcha.
and even in Colombia, I were going to a project that on paper sounded good, but the deposit went under a beautiful white church.
Oh,
So that's not going to happen. So
no.
you've got to, it gets down to the specifics of the location, but certainly the jurisdiction. Are you in the right country and you're in the right province or state within that country where the
Okay.
politics is such that you can build a mine?
All right.
That's important. So jurisdiction and location within that country.
That
Yeah,
was one of
that's
the
a
questions I had for you was like, are there any jurisdictions and or just, geography locations that either in the United States or globally that um, are kind of like under the radar at this point?
I think Scandinavia is still under the radar. Um, Great infrastructure. Your laws are good. They allow mining, and it's permittable. I think Scandinavia is good. I think Argentina has recently improved with the new government.
mhm,
I think Bolivia is actually getting better than it used to be. On the other hand, Mexico's gone down the list in terms of where I'd want to be now, unless you've got a real high grade underground vein deposit.
mhm.
Australia is generally good. Um,
What about
yeah, those are the
Morocco?
places. Morocco, it appears to be pretty good. I mean, there's a couple of companies over there now that are doing
Yeah.
quite well.
Yep. Yeah, I did a little talk with Benoit from Aya Gold and Silver at the event there in
Hmm.
Florida, um, and I kept coming back. I was like, really, Morocco? I almost
Yeah.
didn't believe it because I thought, "Well, why haven't we heard about this before?" Um, and apparently, and it really stumped me because he doesn't have a lot of competition over there right now. And I thought, well, if it's that great, why isn't people in the good jurisdictions? What do you always hear? Well, we got this great deposit, and or if you're Newmont's right next door, or BHP's right next door, or something like that.
Hmm.
Nobody's next door in Morocco, and I just couldn't believe it, right? And he said, Dan, people are talking about being next door to us. So that's that's
That's right.
yeah.
Well, it takes time to get into that, you know, to work that culture because it's not a Western culture. So
Yes.
you need the right people in the right place. The other company there is Royal Road, who've turning up some really interesting stuff as well. They're there and in Saudi Arabia, another country that is on the uptick.
Right. And apparently, I don't want to harp on Aya, but apparently the deposit there is pretty spectacular according to them. Which
It's a good deposit,
yeah.
very good deposit.
So who knew? Like if you tell me about Greenstone Belt or like Labrador Trough or some of these places I've been to in Canada, I just every geologist I know say, oh yeah, they're huge, highly lots of resource there. But nobody's ever said, Dan, you got to get over to the anti-Atlas side in Morocco. It's it's the place to be if you're looking for silver or gold. Um, so it was not, it's nice
Yep.
to learn that stuff, and that's the kind of stuff you learn by just banging around at conferences and going to places like Vancouver and meeting lots of people, like you and Rick and everybody. That there's
Hmm.
no substitute for it. There's no substitute. Um, so Brent, I'm gonna hit you up here. If the answer is you'd rather not, hey, it's totally cool. But is there a current name that you really like, a company that you'll kind of talk about? You don't have to pound the table, and our subscribers, like or our listeners to the podcast, they're adults. They know that if they put money into something, it's on them, not you. So, you got a name for me?
Yeah, I'll give you. I think copper is a good place to be
Yeah.
longer term.
Yep.
You know, the shortage is coming, all that sort of thing, and the electrification of the world. Um, I like a company called Arizona Sonora Copper,
Hmm.
Vancouver listed. They've got a deposit in Arizona on private land, so you don't have to deal with the federal government for the most part. It's an old deposit they've expanded it. So there's the environmental liabilities are virtually nil. They've secured the water rights. The town next to them is keen to get that thing built, and they are up dip of Robert Friedland's Ivanhoe Electric Santa Cruz deposit. That company's got $1 billion U.S. valuation.
Hmm.
Arizona Sonora is about 100 million. So I think there's room there for improvement,
Okay,
if you
Brent.
will.
Brent, tell our listeners what
Mhm.
up dip means.
Oh, sorry. So the Santa Cruz deposit is pretty deep and
Hmm.
it sits like this,
Hmm.
and then their deposit sits up higher at surface.
I see.
So logically, um, Ivanhoe Electric should take that out as well.
Right.
That's logically. We'll see what happens, but that would make for a much more efficient operation, and they could start at surface as well. Another one I like is Mawson Gold, Canadian listed. They've got a deposit in, or developing a deposit in Victoria, South Australia. That is very high grade, shows good continuity, and it's like a deposit next door that who owns that now? Agnico owns, that was bought for a big bunch of money. That's where Eric Sprott made a ton of money, whereas he owned Fosterville, which was bought and bought again. So that's a really interesting deposit as well. I think it's going to develop into a nice high grade system.
It sounds
Those are two I can.
okay. Um, so this speaks to a point that we made before. It's about um, people with nice deposits saying, Ivanhoe's right next door, or Agnico's right next door, something like that. It sounds like an enterprising investor could run around just looking for that. Like they don't have to look for, somebody who's out alone, away from anybody else. They can just go around, look at the big deposits, and see who's in the neighborhood. See who, is that a reasonable idea for an enterprising individual investor?
Not necessarily. I mean,
Oh.
I can show you. We just talked about that deposit in Australia.
Mm-hmm.
A nice high grade deposit next to a nice, developing high grade deposit. Then there's a fault, and east of that fault, there's bugger all, because it's gone. It's been faulted off. So people do have claims over there,
Mm-hmm.
but their odds of success are like not very good at all.
Right.
So it does help to know the geology. I remember when I was working in Papua New Guinea,
Mm-hmm.
um, there was the big discovery, Lahir, which is 30 million ounces. And all these other companies picked up ground on the islands around it, and they would draw a line between that deposit and their property saying this is on trend. But, they're going east, west, north, south from there. So it really didn't work that way.
Okay. Um, so that answers, just it speaks to the utter complication there. It's hard to make a general rule, isn't it? It's hard to make these bullet points I'm
It
asking
is.
for. They're hard fought and won, aren't they?
Yeah, I think now that you mentioned it, they are.
Yeah, because each deposit, it's there are categories of types of deposits, right? And
Mhm.
people can learn to look for those. But just because you found one of those doesn't mean success, right? There's each one has its own idiosyncrasies, does it not?
Yes, it takes a very unique set of circumstances, geologic circumstances, to form an economic deposit. I mean, I think on ballpark, for every really good porphyry copper deposit,
Hmm.
there's probably 50 that are just not don't have the grade. That might be too bad. Call it 20.
Okay.
20 that don't work.
Okay.
Um, and that's just the odds. I mean, otherwise, gold doesn't sell for what 2,400 an ounce because it's easy to find. It's I can I mean, there's billions of ounces of gold in the seawater, but it's not economic.
Right. Um, Boy, if they ever figure that one out, the gold price might be in trouble.
Yeah, I'm not worried.
Yeah, me neither.
Hey, Brent,
I
you
think
mentioned copper before, obviously with the macroeconomic, forces behind it now and probably for a while. But um, I've always been curious, how is mining copper different or similar to mining gold or anything else, that like where are the unique things about finding and mining copper?
Well, let's see. An economic copper deposit will average in the order of 0.5% plus, depending on a lot of stuff. Copper, 0.5% copper. Whereas gold, you're looking at half a gram gold per ton. So right off the bat, there's a huge difference in concentration. And then the mining method could be the same, but again, you've got to mine a lot more ore to make money on copper than you do with gold, just because of those concentrations. And then coming down to extracting it from the rock, sometimes it's similar in that if you, like a porphyry copper deposit, you float the metal off by float. They agitate it and it sticks to bubbles and they float that off, and you get gold and copper together, and then you extract it together. Um, so in some respects, I'm not sure I'm getting to your
Yeah,
question
no,
there
you are.
yet.
Yeah.
It's it can be similar and it can be a whole lot different depending on the type of deposit.
Yeah, I was just curious because I've always heard about some sort of relationship between gold and copper, but I'm like a noob. I know little about this, but
Mhm.
I've always heard there's some relationship, and I just wonder, like, with these gold companies that know what they're doing with gold, and then obviously there's this whole in the mainstream, there's all these narratives about copper. I just wonder how easy it is for like those sorts of same people to make that transition over to copper.
It's actually not that hard if you're looking at large, again, porphyry copper deposits. And porphyry copper deposit is basically a magma that's cooled into a granitic type rock, and at the very top of as it's cooling, the ore, the copper, and the water, silica, and all the metals, they don't get incorporated into the crystal structure of the granite. The quartz grains and stuff. It's kind of like scum on top of a deposit, or on top of a bowl of soup, or a pot of stew or something. The scum on top is the good stuff. And mining, that's where it occurs, and it's generally big, and so that's where the deposits are formed. It's not that hard for a gold company to come in and figure that out and mine that and extract it.
Yeah.
I don't know if that made any sense at all.
No, it does. It reminds
Yep.
me of something that a geo Neil Adshed told me. We were in
Mhm.
Labrador Trough, and he explained to me. He said, um, you can you can mine gold in various places because, as you say, it's $2,000 an ounce, right? So you can mine it and sort of, if you can make bars or whatever, maybe you could even take them out by helicopter or something, is what he suggested.
Yep.
Versus needing the infrastructure to, you got to find iron ore in the right place because you have to scoop it out. It's price per ton. You got to scoop it out of the earth in massive quantities and have a railroad and a seaport and all this other stuff nearby. So it's a different sort of a proposition. Um, and I would expect copper, the dynamic that you touched on earlier sounds similar to me between copper versus gold.
Yeah, exactly.
Yeah.
Yeah, that's exactly right.
Yeah. All right. So, that's a consideration too for budding exploration mining investors, or any exploration mining investor for that matter. Um,
Yeah.
all right. Good to know. Um, Speaking of uh, copper, and you said this earlier, one of the things you got to do is form a view about this. Um, and you touched on something that I think is really important, and Robert Friedland has touched on this too. He and others have made these comments like, one guy said, we're going to need 8 new Escondida mines. Escondida, the largest copper mine in the world in Chile. We're going to need 8 of these in the next, 8 years, one guy said, or, by 2035 or something. Um, and they don't exist. And I was talking with someone recently, and I said, we hear these narratives. It reminds me of when I was a kid. I said, and people said, boy, I'll tell you, one day 1 billion people in China are going to buy a refrigerator, and then the metals prices are going to sure move. And, in the early 2000s, that finally happened, 40 years later after somebody
Mhm.
told me. So I just wonder, I'm buying this narrative like electrification. We don't even need the green energy transition, do we? We just need electrification. There's 1 billion people that don't
Mhm.
have reliable electricity in this world, and you get them reliable electricity, and we really do need those mines. Um, so, do you, Brent Cook, make projections on copper prices, or do you simply look at the situation, get bullish, and not worry about the price?
Probably mostly the latter.
Yeah.
I think, in terms of, how much copper we're uh, mining and producing right now,
Hmm.
we're burning through one Bingham copper mine a year. And Bingham copper mine is that big mine outside of Salt Lake City. So in theory, we need to replace that every year, and we're definitely not doing that.
Mm.
But I think the idea that we need 8 Escondidas in the next 10 years is not really accurate either, because what does happen as the price goes up of copper goes up, mining companies can start mining lower grade.
Hmm.
And a good example of that is a big deposit in Chile, El Abra, which has been operating for a long time. It's a big mine, and the owner is going to put another $7 billion into expanding that deposit production. So there's a deposit that's going to, you know, start filling that gap. So I think we've got to count in these other deposits that are just going to expand their resources. But nonetheless, we definitely do not have enough deposits on the horizon to come into production to fill what I think we're going to need. I
Right.
mean,
So, yeah.
in general, it takes 10 to 20 years from discovery to production. The whole drilling it out, the studies, the technological studies, the permitting, all that. It
Hmm.
takes a long time to go through that process.
Yeah. So that's a good point. The way I sort of frame it in my mind is that um, people talk about shortages in these things, and higher prices. Higher prices bring metal out of the frickin' woodwork. I mean, they just do, right? So, but you've
Mm-hmm.
just sort of put the rubber on the road for that idea, haven't you? Because you explained, the capital investment is available, and in this one case of the mine El Abra, the resource is available. It just needs the capital, and maybe at current prices, they're telling us, yeah, it's worth it. We're going for it. So it's. I'm glad you made this point. It's very important for hyper kind of copper bulls. But the basic thesis is sound. You know, we want to emphasize that
I
too.
believe so.
Yeah. All right, Brent. It's time for our final question, which is the same for every guest, no matter what the topic. And if you've already said it, by all means, feel free to repeat it. And the question is really simple. If you could leave our listener with one thought today, what would you like it to be?
Jesus. Oh
Take
my
your time.
God. Um, yeah, okay. Yeah, enjoy life. That's what we're here for.
There you go. We're getting more and more answers like that over the past several months. More and more people are saying, "Can I? Does it have to be about investing?" And they're saying like, enjoy yourself, look around, get in touch with touch grass, spend time with your family. You only live once. All these kind of things because let's face it, all this money stuff that we talk about, um, you can really get wrapped up in it, can't you? You can kind of get obsessive, and it's really unhealthy, isn't it?
Yeah, I know a lot of really rich people whose lives are controlled by their money rather than vice versa.
Hmm.
That doesn't sound like fun to me.
Yeah, what's the point of being rich at that point? It's just
Exactly.
I thought rich was about peace of mind, you know.
Hmm.
All right, listen, Brent, I don't talk to you nearly enough. I need to remedy that, and maybe we'll do it partly by getting you back on the show a little more often than every couple of years here. So thanks for being here. Really enjoyed it. Thank you.
Yeah, well, thanks for the invitation. I enjoyed it too, and look forward to bumping into you at the next show.
Yeah, there's one in September, I think, in what, Colorado or someplace. Are you going?
Beaver Creek. Yeah,
Beaver Creek?
I'll be there. That is the best junior mining show around.
Okay, good to know. Maybe I need to register with that. Maybe I'd like to run into you there. All right, thanks a lot, Brent.
Yep. All right, see ya.
Bye-bye.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.